Welcome back to this special presentation. This is the India Revival Mission, and today we are going to talk about the banking sector. Are the fundamentals of the banking sector strong? Is our financial services sector in deep trouble, as many reports have suggested? The RBI itself has come out with a very cautiously optimistic look. For more on that, we'll try and pick the brains of our eminent panel tonight. Joining us is Ashutosh Khajuria, ED and CFO, Federal Bank Limited. He joins us along with Subash Garg, who's a former finance secretary. Thank you for joining us. Also with us is Dhirendra Kumar, CEO of Value Research. Anirban Dutta, banking expert, joins us. Also on the program today, Ajit Pai, officer on special duty to the Vice Chancellor, Vice Chairman, I beg your pardon, of the NITI AYOG. Thank you all for being with us. Subash Garg, I'd like to start with you if I could. Now, the COVID-19 pandemic, nobody saw it coming really, but it has affected every country in the world, more so India, more so the Indian economy. Now, if you heard the RBI chief, Mr. Das' speech just the other day, he maintained a very cautiously optimistic look here. Before I get into the nitty-gritty of what ails our banking system, our financial services sector, and what needs to be done, what is your outlook post the COVID-19 pandemic, where we are currently in the middle of Unlock 3.0, as they call it? What is your broad-term outlook for the banking sector and the economy as a whole?
Well, I think the problem is global. It's pandemic. It's not confined to one geography, and therefore the impact is wider. There's absolutely no doubt. I'm not trying to understate that, but the fact remains that at the same time, there has been a good resilience seen in quite a few economies. We have seen V-shaped recovery coming in, some of the geographies. Only thing is, it has peaked little later in India, and as a result of that, it is still showing very high numbers as far as the infection is concerned. But on the other hand, we have a very low mortality rate, and everything, I think, wherein saving life is more important than anything else. And in the process, we would have seen, extended lockdowns. And as a result of that, its impact on the economic activity. But when we look at the strength of Indian banking system and all, I think it was, facing challenges because of the credit quality once the asset quality review in 2015 was done. But thereafter, there had been a very, I would say, a strong recapitalization. And as the earlier chief economic advisor had also mentioned, it's a 4-hour process where you have to first recognize the problem and then, recapitalize the banks while simultaneously resolving it through new legislation. I think insolvency related, bankruptcy court and all is the process in that direction. And finally, more and more reforms. So I think the first 3 were doing very well just before the onset of COVID. There had been some setback on account of this pandemic and all, but I'm very sure Indian banking system is quite resilient, and they are already, you would have seen lots of banks already recapitalizing themselves. In fact, creating more than what is required.
Mentioning, Mr. Khajuria, that the Indian banking system is fundamentally resilient. And I want to go into detail with that. But before I do that, let me also quickly go across to Ajit Pai, who joins us. Ajit Pai, as Mr. Khajuria was telling us right now, recapitalization plan for the public sector banks in particular, not just the private banks, has become absolutely necessary because of what one can call a compression in economic growth, especially after the COVID-19 pandemic hit, after the lockdown came into the force as well. Now, the need for banks to recapitalize and build cash buffers, raise capital, as Mr. Khajuria was mentioning, to ensure credit flow and the overall resilience, as he called it, of the financial system. How well is that going? Some banks we know have recapitalized, they've raised capital as well, but the public sector banks in particular is where my worry area seems to be. Are you as worried as I am?
So just in terms of I think the nuances in the way you phrased that question, I would say that it is not necessary based on the current metrics. But the moment, you have all these sort of unused amount of capital that is lying, with the RBI of the public sector bank, There's a lot that's not been deployed in advances. But what I would say also is that as the moratorium lifts in the next few months, what you are going to see is an increase in NPAs. Now, will the rising NPAs be able to get offset by the bank's balance sheets currently or not is yet to be determined. A large part of that will depend on how much stimulus impacts the economy right now, what kind of growth you're going to get in the economy over the next quarter or two. And I think the approach of both the RBI as well as the government has been to take a calibrated approach, to actually have those bad numbers come out, to see and if things are not as bad as some people fear, then the amount of capitalization that would be required would be lower. So at this point of time, I think you are watching banks that are fairly capitalized. We also know that the deterioration in the economy is taking place, and when the moratorium lifts, you will watch a greater number of NPAs. And at that point of time, we can determine what is necessary.
Mr. Pai, why do you think, apologies, I'm intervening right now. Why do you think that the RBI accepted demands from certain bankers, very prominent bankers, for a one-time loan restructuring instead of extending the moratorium as a way of countering the impact of the pandemic? Why do you think that was a better approach rather than the moratorium?
So let's have a look at what a moratorium does. A moratorium takes away the ability to gauge the difference or to grade the people that take credit on their credit record. So when you look at 3 months or 6 months, I think that's the absolute limit to which you can go to actually be able to differentiate between different borrowers on whether they are reliable or they're not reliable. Now, a restructuring itself, as we haven't gone into the nature of the restructuring because that's going to be determined by a committee in the next month. And then it'll be another month for the RBI to force that. But the big value addition of restructuring is that the current circumstance is not one that is determined by normal business risk. So it does not reflect on a bad business plan. It does not reflect on the bad intentions of the promoter. It does not reflect on bad business decisions. What it is reflecting is a one-time anomalous black swan event to which the government has responded in a way that is, quite decisive, where there were so many unknowns.
Mr. Pai, that's very interesting. But, the concern here is, and I want to get Anirban Dutta on this as well, if a one-time restructuring, Anirban, of loans, could that not land us into the quagmire, really, of the NPAs that we've seen after the IL&FS crisis and many other public sector banks, the PMC crisis, for example? Don't you think there is a danger of landing in that quagmire again, unless, and I put a caveat here, Anirban, unless the RBI make sure there are enough checks and balances in place?
See, restructuring is nothing but delaying your debt. Restructuring is nothing but, some kind of window dressing to avoid this NPA determination at the end of the financial period. The thing is that, when the moratoriums were granted to all these customers, right, borrowers, they are enjoying it, and it has been started since March and it would end in the month of August. It has been done in 2 phases. But it is absolutely, I feel so that it is not the right decision, by the RBI to get into this restructuring for the next couple of months for all those borrowers. See, restructuring is nothing but, delaying your debt, according to me.
So you feel this is a BandAid for a much larger wound, so to say?
Absolutely. See, the thing is that those customers who are not paying those EMIs now because of this pandemic and, opted for these moratoriums. But having said that, it has been expected that, since this moratorium is over, they would start, paying their EMIs. But if you are allowing restructuring again now, then, the banks would not be able to collect the EMIs on time.
But let me also give you a statistic. I was in my research for this program, Anirban, and as I reintroduce Subash Garg, former Financial Services Secretary, on the program. Thank you for joining us. Let me just quickly, Anirban, give you a stat here. A recent study estimated that debt worth around 3 lakh crore rupees is at risk of slipping into NPAs or non-performing assets due to COVID-19 unless it was restructured by banks. Now, a scheme that would allow banks to not classify the non-repayment of loans as NPAs under certain conditions would provide relief to them. That's the counter argument to what you were saying. So why shouldn't the banks, why shouldn't the RBI do that?
See, ideally, if the repayments are not coming, then it has to be classified as NPA, right? As per the classification.
Right.
But at this point of time, getting into restructuring mode, you are allowing those borrowers that they have not paid since last 6 months. Again, they would be, opting some, advantages and here and there, and it would continue to happen. You have to think about the banks whose monies are being given, to those borrowers. It's public money. And absolutely, if you are, allowing those customers to get their loans restructured, then customers, those who have paid their money,
let me also quickly go across to Dhirendra Kumar, who hasn't spoken on the panel yet. Dhirendra Kumar, you've heard the guest speak here. What is your take on where we are at as far as the fundamentals of the banking sector are concerned? Also, the fact that certain panelists believe that this loan restructuring business, even though it might help certain larger companies, it will end up exacerbating the problem rather than actually finding a solution.
Where we stand now, the fact is that we don't know. The moratorium will come at this month end, and only when we get the banking sector's results of September ending, we will get a sense of what is NPA, where is the stress, how many individual investors, what is the scale of default in the home loans, consumer loans, SMEs. Large businesses we know where the stress is, and I think that will be restructured. This is an unusual event, and it needs to be responded with unusual initiatives as well. Banking is also a business. If you just go about telling people that this is the due date, pay the money, they don't have the money, take the assets. This is not a conducive environment for somebody to go and auction their assets. Even if they IBC is disbanded for a defined period. Banking sector was anyway, undergoing a long-term reform. We saw the 10 public sector turning into 4. It was just before the start of this crisis. So I think, it requires, and beyond that, I think, we just need, the reform that is needed is, bringing in some degree of accountability of these 4 large public sector banks which have come into being. They are big. And, the government's goal of extending credit to in a desirable way, with all kind of accountability and transparency. That I think, so this is actually now, the reform is in the execution. I don't think we need in the policy. And one-time restructuring for a one-time special event, a black swan event, I think it is desirable.
Okay.
And I don't think
on that note, because we haven't spoken about NBFCs yet, and they include, they of course form part of a very important, let's say, vertical of our financial services sector. Now, Dhirendra Kumar, NBFCs or non-financial firms have been contracting since September 2019. Now, much before the pandemic hit. The magnitude of contraction saw a spike of 37% in the April-June quarter, the first since the lockdown was imposed. Now, the after-tax profit, according to my research, of such firms, of non-financial firms, have decelerated to up to 92% in the April-June quarter, suggesting therefore that their financial performance has been adversely impacted by the lockdown. There were already talk about how the lack of transparency and accountability rules the roost in the NBFC sector. With the pandemic hit, it kind of basically exacerbated everything. Now, how do you address that particular problem when there is lack of trust in accountability and transparency practices to start with? Then the pandemic hits, then your complete financial firm is under stress. How do you bounce back from that?
This crisis was there before this pandemic happened. And after, it has only accelerated, it has only catalyzed the whole process. And there's an absolute distrust in the system. And for any financial business, money is the raw material, that is the air. And that was experienced even before the crisis. The NBFC crisis triggered by ILNSS and the DHFL and few others. And after that, I look at mutual funds very closely, and I've seen a complete risk aversion. And then, the freezing of the fixed income, corporate fixed income markets, where NBFCs dominated that. I don't think there is an easy way around. It just requires time. It just requires regaining, a restoration of trust in the system, that people are borrowing for credible lending, and the money will come back over a period of time. Squeezing off, and that credit squeeze, is likely to linger because the pain has been, severe. And I don't think it's going to go away. We are unlikely to see a restoration of that. But if you look at, the NBFC universe, you still have large number of credible NBFCs, the housing finance companies, which are still growing, and they have made, the sensible ones, the conservative ones, the prudent ones, they have, made provisions, and, they have made accelerated provisions, and they are unlikely to be facing.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot.
Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
एक भरोसे का हुनर उंगलियों को मिल गया, मिट गए वो फासले, वो वक्त भी बदल गया. रिश्ते पुराने हैं मगर मिलने के हैं ढंग नए, बदलाव के घुलने लगे अब जिंदगी में रंग नए.
हम जहां हमारा बैंक वहां.
On one side, we have Cricket World Cup winner, Golden Boy MS Dhoni. And the other, ace mathematician and crazy metalhead, my macha, Roy. They are fighting it out on the Poker Stars app. Yes! Macha is in. Are you? Play on PokerStars.in.
Thyrocare, the trust, the truth.
Tata Projects Limited. From metros to highways, accelerating India's progress.
एक भरोसे का हुनर उंगलियों को मिल गया, मिट गए वो फासले, वो वक्त भी बदल गया. रिश्ते पुराने हैं मगर मिलने के हैं ढंग नए, बदलाव के घुलने लगे अब जिंदगी में रंग नए.
हम जहां हमारा बैंक वहां.
I want to go back to Mr. Khajuria on this because I know he has to leave. He's a busy man. But Mr. Khajuria, connecting to what my friend Dhirendra Kumar was suggesting, Shaktikanta Das, the RBI governor, recently in his speech also says, and I quote him directly word to word, he says, while the NBFC sector as a whole may look resilient, the redemption pressure on NBFCs and mutual funds needs close monitoring. He also talked about mutual funds, says they've emerged as major investors in market instruments used by NBFCs, which is why the development of an adverse feedback loop and the associated systemic risk warrants timely and targeted policy interventions. Your thoughts on NBFCs as far as what Mr. Shaktikanta Das has said and the fact that they will require time to bounce back and inspire consumer confidence?
See, overall, if we look at the financial system, the lenders include NBFCs, and they have been complementing and supplementing the banking system in reaching out to the last man. So if we talk of the financial inclusion, I think a good job certainly has been done by NBFCs and MFIs to have the financial inclusion done in particularly those geographies, those areas, those segments of the population where it was probably not cost effective for the banking system to reach out to open a branch and all those things. That's one part. Let's acknowledge what is the importance of NBFC system. Now, my earlier speaker, Mr. Kumar, he spoke, on this particular need of, restructuring and all. One must appreciate this is a black swan event, once in 100 years type of, event and all. If you don't allow one-time restructuring and all that, what is the other alternative? We can find fault with, we can poke so many holes in any of the suggestions or any of the proposals made and all. But is there any alternate solution? Moratorium, please look at it as one of the precursors or one of the parts of restructuring. What is moratorium? You are giving a sort of repayment holiday for some time. You initially started with 3 months, further extended it by another 3 months, so it became 6 months and all. When you talk of one-time restructuring or so, you actually are talking of a repayment holiday, which is moratorium, and maybe some concession in probably the rate of interest so that it becomes, the debt becomes viable and it can be paid. You can change the repayment program of the earlier schedule wherein it can balloon later after, it can have initial some succor, some sort of relief and all, lower installments. And what is restructuring actually? Or the accumulated interest for 6 months and all, put in a separate account called funded interest on loan.
I see exactly what you're saying, and I do agree with a large part of it, sir. You, of course, have more experience in banking, much more experience in banking than I have, so I wouldn't quarrel with you on that. My question was, how does one retain the confidence of the consumer, especially those people who've seen in front of their own eyes, cases like the PMC Bank, for example, many others who have not been reported, or smaller cooperative banks. Now, the confidence in the public sector bank system, the banking system, seems to be shrinking, not just because of the pandemic, but also because of the lack of accountability and the lack of transparency and the complete unchecked giving away of loans and increasing stress on your own assets as far as smaller banks are concerned. How does one address that, especially after a black swan event like a pandemic, in the face, of course, one can argue that the government is trying their best to come up with reforms, but what does the little guy, as the Americans say, how does the confidence of the little guy come back?
So I think banking system is the spine of any financial system or any economy. I'm not talking of India in specific, all over the world, because banking system is also doing the payments and settlements. Whereas the other segments of financial system, like your mutual funds, insurance companies, your pension funds, your other PF trusts and all, they are also very important parts of financial system, but they are not involved in payment and settlement system. Whereas banking system is involved in that. So even if a mutual fund has to transact with another mutual fund, it goes through a bank. Ultimately through a central bank and all, like you have the RTGS, NEFT and all those connectivities and all. My point is, therefore, trust in banking system is of utmost importance and there is no alternative to it and all. And my request would be, I think, we should always look at, strengthening the system rather than casting aspersions on it. Fair and enough. All. Yes. If there are some, miscreants and all, they need to be equally sternly punished and all. We can't throw a baby with the bathwater. That's not the solution.
Again, before I end the show, what is the message that not just the banks, but also the government at some level or the other, along with the RBI, what do you think, how effective do you think these measures taken by the RBI have been in restoring the confidence? And how much do you think that these numbers that predict really that growth is going to be stuck for a while? Now, all estimates, be it the IMF, be it the Goldman Sachs study, be it everything else, they have in fact projected much, much lower growth. Some people have slashed growth by 2 points as well. How do you think we're going to overcome that?
So I think whenever you have an epidemic like the one that you have right now, or pandemic, you watch the different sort of analysts that are forecasting reduce their estimates steadily. So over the past 6 months has been a period of estimates getting reduced, and as more information is known. That will change. There will be a point at which estimates start going up again. So forecasters, unfortunately, cannot forecast too accurately because the future is unpredictable, and a lot of what we do in terms of actions also impacts what the future is going to be. So the government has announced several steps right now. Not all of them have, played out. What you asked about confidence of the common man and of businesses, a large part of that is to do with the restructuring program, where we know that the program is happening, but the details are still being worked out over the next 3 weeks, and then another 4 weeks for the RBI to make any modifications to it. So I think the jury is still out on that. I would think, or at least all the research that we look at and actual data that we do, our primary research indicates that things in the economy are coming back. Unfortunately, not at the pace that we would like to return to the previous levels very quickly. And that would result in higher NPAs than were being anticipated. So what we have to do is we have to look, as the moratorium comes off, we have to look at what's happening with the hard data. We have to look at what happens with the restructuring program. And only subsequent to that, I think, would we be able to size, what kind of sort of recapitalization package is required.
All right.
In the meantime, I think the government is taking steps on two fronts. It is taking steps in looking at the banking sector more closely and what can change in that sector itself. Private sector participation, looking at how the public sector, should be operating. And what I would also draw your attention to is that things like what you talked about, the PMC bank, it's not a public sector bank, it's a cooperative bank.
Cooperative bank, I agree.
Yeah,
I agree.
yeah. So
my mistake there, yes. It's a cooperative bank.
98,000 of those banks, and very clearly our banking sector is highly fragmented. Only about maybe 70 to 80 banks control about 90% of the capital. But there is this high fragmentation that we can do something about over time, and that's an area where I think the government can spend more time. Encouraging the NBFCs as well.
Ajit Pai, because I'm out of time on this, I must thank you all for participating in this India Revival Mission series of programs. Today we spoke about the banking sector and where we stand. I must thank Ajit Pai for joining us, Ashutosh Khajuria as well. Mr. Khajuria, thank you for your time. Subash Garg, as well as Anirban Dutta and Mr. Dhirendra Kumar. That's all the time we have today for this particular show. This is Athar Khan signing off. Thank you for watching.